News 8 at Sunrise in high definition continues.
Welcome back. CPA Jamie Block is back with us. Jamie, good to see you.
Thank you for having me.
You know we're kind of on a trend here recently. In recent weeks, we've talked about financial advice for couples. We've talked about tax considerations for newlyweds. This morning, we're talking about insurance advice for newlyweds. Let's begin with health insurance. What are some of the thoughts there?
Yeah, some things you need to consider when you're looking at new policies when you're married is that you can transfer to your spouse's plan upon marriage. That's a qualifying event. Other things that you need to look at are the benefits that are available. What coverage do you have? Does it cover maternity, specialist costs, x-rays, etc.? Also look at those vision, dental, and prescription coverages, as those are very important as well.
Right, and you make the point, when you get married, you can make those changes immediately. You don't have to wait for, the traditional open enrollment period. I did want to ask you about the differences between coinsurance, deductibles, and copays.
Yeah, so once you have the benefits figured out, you need to figure out what the actual costs are. You have the cost of the premium that you pay for the health insurance, but then you have these other payments that you have to make, such as coinsurance. Coinsurance, what that is a percentage that the insured pays and the insurance company picks up the rest. So, for example, Medicare is an 80% coinsurance where Medicare will pick up 80% of the cost and the insured will pay 20% if there's no other coverage. Now, copays are a fixed dollar amount that you pay, such as $10 or $20, and then the insurance company pays the rest. Lastly, there's deductibles, and deductibles is a fixed dollar amount that the insured pays prior to the insurance company paying anything. So, for example, if you have a $1,300 deductible, you have to pay that amount before the insurance company will pay anything.
Let's turn our attention to life insurance. That's something that all newlyweds should give careful consideration to. Why?
Well, typically you get married when you're young and foolish. No, just kidding. You get married, and when you're younger, the premiums are cheaper, and you're typically healthy. Something to be very cognizant of is if you get diagnosed with a debilitating disease such as cancer or something like that, the chances of you getting a policy are very slim. And if you do get one, it's going to be very expensive.
Now, what if only one spouse works?
Yeah, if only one spouse works, it's very important to get life insurance to cover the wages that that person would have earned in case they die. You want to make sure that you can replace that earnings so you can keep that standard of living.
We should, similar thought process here along with disability as well, right? You have to take that into mind when you're in a relationship.
Right, so if only one spouse works and that person gets injured, you have to figure out where your money's going to come from. So you want to make sure you have disability insurance coverage. So, for example, New York State does have disability insurance for employees, but that only pays half of your wages with a cap of $170 a week, and they only pay for 26 weeks. And that, if you know, that's not a lot of money to live on. And if you have an extended injury after 26 weeks, you're out of luck. So it's very important for people to consider buying a long-term disability policy that will help fill in the gap. So those typically cover 60% of your wages, and you can set up how long that coverage is.
All right, bottom line, know your benefits, especially when you're a newlywed in a new relationship. CPA Jamie Block, thank you. Appreciate it.
Thank you very much.
For more on this, head to our website. You'll find it at rochesterhomepage.net.
And we got a lot of fog and drizzle here from the top of Cobb's Hill looking down over Rochester. Really can't see